So, welcome to the Tri-Cities Homebuyer Workshop. If you're watching this live, thank you for joining us. If you're watching the recording later on YouTube, welcome. I hope you find this helpful information in your home buying journey. So, um, my name is Daniel Lacic. I am a branch manager and loan officer with Loan Factory. I'm also a realtor. I'm here local in the Tri-Cities, Washington, Eastern Washington area. Um, my goal is to provide some clear guidance and answers today, some practical advice for anyone that's thinking about purchasing a home here in the Tri-Cities. And my goal is to educate today, and then you decide as to what it is and you want to do, and which way the uh, best options are for you. So over a decade of experience in real estate and lending, I've been doing this for a while. I don't claim to know everything, but I helped a lot of folks with their home purchases, with their lending, investments, stuff like that. So we will also have a Q&A session, question and answers, where you can ask some questions, or you feel free to also drop them in the chat box if you want to. And as I see them, I can address them as well. Um, but yeah, let's get going. Today, my goal is to kind of cover the most common 7 questions that I get asked quite a bit. I mean, pretty much all the time. So these are the 7 questions I get asked a lot. So this is something that I wanted to answer today. So this is something that we'll be learning as we go through these slides. So number one would be, can I even buy a house? We get this a lot. Can I even buy a house? What does it take? Can I afford it as well? So that's the second one that I have on here. Which loan should I choose? There are so many different loan products out there. Which loan is the best one for me? Should I use down payment assistance? Should I not? We get that a lot as well. So another one is, what happens after the pre-approval? Now I'm pre-approved. What do I do now? Um, Mistakes. What should I avoid? What should I not do as a first time home buyer, or even a seasoned home buyer? What should I avoid? And then a very common one too is, I'm ready now. Where do I go? What do I do? So I'm going to cover all of those today, so that we can have a clear vision here that can hopefully provide a little bit of a help for someone that's thinking about buying. So can I even buy a house? What does it take? What is a lender, from a lender's perspective? What is a lender looking at? What do they want to see? So basically, there are four boxes we as lenders look at: your credit, income, assets, and the ability to repay. So your credit obviously is, how have you managed your debt? What is your credit score? Is just one part of it. Um, how have you managed it? Have you been paying the payments on time? Are you overutilizing your credit limits? Are you being responsible? So credit is a major box that we look at. And then the next one is the income. Obviously, are you employed in a stable industry that is providing stable income, that is going to keep providing stability and the ability to actually pay for your debts. We as lenders are required to document the last 2 years of employment history. In most cases, in most loan scenarios, we have to go back 2 years. Now, you don't have to obviously work at the same job for the last 2 years, but you do have to show the consistency of being employed for the last 2 years in most loan products. And then the assets, where is your down payment coming from? Every loan product has a different down payment requirement. There are also closing costs. Sometimes you are required to have reserves. So we would require to look at, like, bank statements or gift letters from donors and stuff like that, to assess that situation. So once all three of those boxes, like the credit, income, and the assets, once we have that information, then it becomes a ability to repay. ability to repay comes into play at that point, where we look at the complete approval, picture. So this is where we take it in consideration. We take everything, we put everything together, and we see, hey, does this person have the ability to repay this debt, and should we lend to this person to buy a home? One of the big myths is the perfect credit and a huge down payment that they're always required, which is really not the case, because different programs have different requirements, and so and different loan products require different credit credit guidelines that they have to follow. So for an FHA, they're a little bit more flexible, for example, on certain things than a conventional loan is. So it just depends on everyone's scenario is different. So it just depends on that scenario. The second one is can I afford it? What do I need to buy a home? So you're going to need a down payment, obviously, and and the closing costs. So once you have the down payment and the closing costs, you purchase the home, and then of course you have a monthly payment. The monthly payment consists of typically about five different things. Your principal and interest, which is what is used to pay off the balance, plus the cost of the ownership, the interest. Then you have your property taxes. Then you have these are your county taxes that you pay, and your homeowner's insurance in case something happens to the property that you are insured, and your mortgage insurance. If you're putting less than 20% down, a lender will typically require you to put to pay for a mortgage insurance. So all those items, those five items, like the principal, interest, property taxes, homeowners insurance, and the mortgage insurance, those are typically lumped in all together into your monthly payment. Most people choose to have it done that way because it's easier to keep track. You can choose to have to pay for them separately if you want to, and some people do choose to do that. But especially first-time home buyers, they don't want to manage that themselves, so they just lump it all together. And then on top of that, you have your HOA. So the HOA is not usually most of the time it's not lumped into that monthly payment. It's separate, but it does get counted in the actual monthly payment as a debt, because it is an expense that you're paying. So the goal of the payment obviously is a comfort, not max qualification. So you don't want to stretch your budget to the absolute limit. You want to focus on a monthly amount that allows you to live comfortably. So you don't want to just be paying mortgage and then be broke for the rest of the month. And also another myth is that same price is always the same payment, which is never really the case, because every property is different, location is different, taxes are different in different locations, the homeowner's insurance is different, the HOA might be available, there might be an HOA here, but there might not be one over there. So interest rate, loan types, and down payment, it can all change the final number. So a same price is not always the same payment, and that is one of those misconceptions out there. So which loan should I choose? These are the most common four used. We do have many other loan products out there for self-employed and investments and stuff like that. But most of the time, if you're purchasing a home as a primary home, you will be either going with a conventional, an FHA, or if you're a veteran, you go with a VA loan, or an USDA loan, which is for the rural areas, like outside of the city limits, and some suburban areas as well. The conventional loan typically is for if you have solid credit, some down payment. Conventional loan is typically a better route to go, because you will pay less in mortgage insurance versus a FHA. But an FHA is more flexible, has more flexible credit guidelines, and both of these have low down payment options. Like the conventional, you can get a conventional loan if you're a first-time home buyer for only 3% down, and an FHA is 3.5% down. But a VA is obviously, VA and USDA is 0% down. So VA for our veterans and service members, it's a great product for them. So So they can purchase a home with 0% down and no mortgage insurance, which is awesome. So what you want to do is when you're shopping for loans, you want to compare payment, cash needed, mortgage insurance, the eligibility, and then the long-term impact. What is it? What is this? What is this going to look like in 2 years? Am I going to stay in this home for 5 years, 10 years, 15 years, or am I going to be just living here for a couple of years and then selling, or you have to look at your long-term impact of that loan and your goals when you compare as well. So this is a big one. So should I use down payment assistance? There are some pros to that and some cons as well, trade-offs. So we get a lot of times, I get a lot of questions when it comes to down payment assistance. And this is a lot of it is because there's a lot of like bad marketing out there, in my opinion, where people think or are being told that they can just buy a home with no money. And that I've been doing this for like 10 years. I've only seen that happen once, but even really didn't happen that time because the guy had to still put some money down and then he got it back because he was using a VA loan and there was some left over that so it worked out where he got an actual check for $500 or something like that. But in most cases, and this is what I have to explain to most people, is that these are down payment assistance programs. They're not down payment replacement programs. So they may reduce cash needed up front, and help you with closing costs and the down payment, but typically they're not going to cover all of the costs. You'll still have to have funds like for like a home inspection, for appraisal that you have to pay for prior to closing, earnest money, stuff like that you will need to cover prior to closing. So even though you're getting that down payment assistance, you're still going to have some money in the bank to purchase a home in most cases. So the trade-offs on that is that a lot of them do have income limits, so certain amount of income that you cannot go over to qualify for it, or property limits. They have to be like within a certain area, like a city, in one of the city down payment assistance programs. They have to be in that city. Repayment rules, most of them will not let you keep that money. There are some out there that will forgive it, that are forgivable after a few years, but in Washington State, it's you don't really have a whole lot of choices when it comes to down payment assistance, in my opinion. It's mostly the Washington State bond, that most bonded one that people are using, and those are not. Those ones are repayable. You have to repay them, and if you do refinance, or if you end up selling the property, you have to pay that back. So it says on here also it may affect your rate or loan structure. It'll definitely affect your rate. Most of pretty much all of them are, the rates are higher when it comes to down payment assistance program. Typically, like the Washington State one, they list their rates daily on their website, and it's usually higher, quite a bit higher, like at least a percent higher than what we have available for people that are not using down payment assistance. So we've compared all of those options. Obviously, it's not something that works for everyone, but it is something that can help some people get into owning a home. So what happens after I get pre-approved? So the pre-approval gives you a clearer budget and helps sellers see you as a serious buyer. So when you come in with a pre-approval letter from a reputable lender, it makes your offer stronger. So the seller of the property will see that and say, hey, you know what? This person has been pre-approved, has been somewhat vetted, and they can probably purchase this home. They're serious. So I wanted to go over these steps right here, 8 steps of what happens between pre-approval and actually when you get the keys for the home. So obviously you talk to a lender, you fill out an application, you get pre-approved, you get your credit check, you get your income check, you get asset check, and ability to repay, all of that stuff we just covered. And then you're pre-approved. Now you got a letter, pre-approval letter, and now you go and find a realtor. You can you go and make an appointment with a realtor, a local realtor, and you sit down and you probably go over a buyer's agreement with them, and you tell them, this is what I'm looking for, this is what I don't want, this is what I do want, this is my pre-approval letter, this is my budget. And then you start the home search. You start looking at the home search. That could take weeks. That could take one day. I mean, if you could just walk into the first home and fall in love, that happens sometimes. But sometimes you might have to look at 10, 15 homes. So that the home search, it could take a few weeks. It could take a few months. And then once you find that home, you make an offer. So this is where you make an offer to the seller, and you say, hey, I want to purchase this home. Here's my pre-approval letter. And then once you get under contract, once you guys are negotiating and you get under contract, that is when you submit all. You would bring that contract to the lender, us, and then we would submit all of that to the underwriting. We'll get that process going while you're, on the other hand, are going through your inspection and your appraisal. Your inspection is basically where you hire a home inspector to come out, and he checks things like plumbing, electrical, leaking pipes, stuff like that, stuff that like needs to be repaired. He'll check through those, give you a detailed report of what is all wrong with the property and what is not, what's still good, or what shape it is in. And then the appraisal is a little different, because the appraiser will come out and they will actually check the value of the property. So they're not really looking at leaking pipes and stuff like that, unless it's like causing a material defect or whatever. Like if it's causing like a big problem that's affecting the value, then they will bring it up. But an appraisal is just appraiser is looking at the actual value of the property and comparing your contract, so your purchase price, with the properties around in that area that have sold in the last 6 months to a year, to see, hey, is there a value in this property? Should the lender be lending something like this amount of money for that property? So you would go through that, and then once everything is done, your appraisal, all your documents have been submitted to it goes all into underwriting, and then the underwriter will look through all of that and give us the clear to close. And once you hear the clear to close, that's what pretty much everybody wants to hear: the clear to close, clear to close. Once you hear the clear to close, we schedule your signing and closing, with the title escrow company, and that's where you go in and you finalize the sale. You sign the contract, the loan documents, and you will typically sometimes you'll get the keys right then and there. Sometimes you'll get them later. It just depends on where everyone's at, because sometimes they have to still move out of the house. But timeline wise, obviously during the pre-approval, you want to at least give yourself like a week for a pre-approval. Really, I know there's a lot of people out there that are like, they're marketing again, fast pre-approval, get your pre-approval in 2 minutes. But like a lot of times that doesn't work that way, because if you have a bit of if there's like someone that has had a lot of jobs or a lot of moving parts, like it could take some days. You want to kind of give yourself about a week to get pre-approved, really. And then once you get pre-approved, your home search, it could be, like I said earlier, it could be, the first home, or it could be the 15th home. We don't know. But once you make that offer here on point 4, once you make that offer, between that offer and to closing, it's typically about 30 to 45 days. And typically most of the time it's about 30 days. Sometimes we can get it done earlier, 3 weeks, sometimes depends on how fast everything moves, how fast the appraisal gets done, how fast the underwriting gets done, and everything. But typically, you want to do a 30-day close from a contract to closing. So communication obviously is a huge thing that keeps the process moving. There's a lot of parties involved. I think like on one of my last transactions, I just kind of went into there, and it was just a regular first-time home buyer that was buying a home, and I counted like 17 or 18 people in the file or something like that were part of this transaction. It was like a simple transaction. So there's a lot of moving parts here between the buyer, lender, realtor, title, escrow, and a bunch of other parties. So you want to have you want to hire someone that's going to keep the ball moving and knows how to communicate effectively with all these parties to keep the process moving so that you can actually get your keys and not lose your deposit, the earnest money deposit, right? So that's very important. What should I avoid while buying? So a lot of times there are things that people just don't know, and they make these mistakes sometimes because they just don't know. But I wanted to cover that here. What to avoid while buying. So no new debt, right? Because we're as a lender, the lender is monitoring your. We've issued the pre-approval based on your credit. So if you go out there and you buy another car or RV or a boat, that affects your credit score, that affects your debt and everything else. So you want to stay away from new debt, really. You don't even really want to like check your credit or do any of that stuff. You don't want to change jobs, right? So you don't want to just, start unless you really have to do a job change or, definitely not like a pay structure or like industry changes or anything like that. I mean, if you do have to do it at some point, um, if you do have to do it during the process, just let us know right away so that we can start the process of documenting that move. Yeah, so job changes, just kind of wait, right? Large purchases, like I said earlier, like furniture, appliances, big spending, any kind of like RVs. And a lot of times what happens is that people will go out and buy like couches and appliances and stuff like that and that goes on your credit and they'll use credit cards and stuff and they don't even think about it, but it's something that definitely could put it could cause you not to be able to close, especially if the debt to income ratio is really close. Like it could possibly derail the whole thing. Any unexplained deposits, like document those before depositing. You probably just you know you probably just want to stay away from that too. I had a guy that last year, a week and a half before closing, he provides bank statements, the last bank statements that he needed to provide, and it showed a $20,000 deposit on there. And so the underwriter's like, well, what's this? What's going on? We need to find out what's going on with this. But it was all legit. It was this brother or cousin, I think, that was like owing him money and paid him back. So we had to go back and get the letter from the cousin. And then, there is documentation that needs to be provided at that point, and it almost derailed the thing to where we almost had to like extend it. We got it done though, but we still got it done. But it put a lot of pressure on him and on everybody else at the closing table too. So like, that's something to avoid. And then this is the most common one, the waiting too long. Like I mentioned earlier, give yourself a week to get pre-approved, to go through the pre-approval process, to make sure that your loan officer is actually covering everything because a lot of times when things get rushed, things get missed. And so what people will do is they'll wait too long and they'll go and try to get pre-approved when they already found the house, but now they have to provide all this documentation. They don't know where their pay stubs are, they don't know where their taxes are, and it takes some time. And then when it actually gets done, that house is sold. And so get pre-approved before shopping. That's probably the biggest thing. People that don't get pre-approved before shopping, they make that mistake. That's probably the most common one. I'm ready. Now what? So here after this slide, we'll go into questions and answer section, and then I will put a QR code where you can schedule a personalized schedule a strategy session with me, 20-30 minutes. We can talk about your personalized plan, your pre-approval, house shopping, closing, all of that stuff. We'll review your goals, timeline, income, credit, savings, debts, cash to close, location, everything. So I will put that on the screen here shortly. And then we'll go here. Let's clear up any questions. Are there any questions that you may have right now? There are no bad questions. I don't see anything in the chat either. So If something does come up, you feel free to reach out anytime. Or like I said, here is this slide here that you can scan real quick and schedule the session for a personalized home buying strategy session with me, or my phone number is right there as well. And yeah, unless there are any other questions or any questions, thank you so much for being here. I appreciate your time. I hope you got some. I hope you got some beneficial information out of this workshop, and reach out anytime if you have any questions. Thanks. Have a great day.